Hello everyone, welcome back to the channel. Just wanted to go over the price action for today on the markets and where I see the markets heading in the next couple of days, weeks, months. So let's go over the broader markets first before I dig into my two favorite stocks that I have on my radar. Uh, so you can see the QQQ. It's been a couple of days. I've been saying that we should be getting a pullback, but today we got a gain of 1.5%. Where do I see things going? Again, it's hitting the top of the Bollinger Bands. All the indicators are extremely overbought. RSI is almost a 70. Stochastics are overbought. MACD, I don't know if it's just been going parabolic, and things are looking very euphoric in the markets. Everybody is posting screenshots. Nobody's taking profits. That's usually a sign where the markets would like to reverse. Also, we have a couple of, it's going to be a volatile week. We have a couple of macro events like core PPI, jobless claims going to Thursday. And also, I think Powell is also, Fed chair is also scheduled to speak on Thursday. So it's going to be a pretty volatile week. Yes, Fed Chair Powell speaks. So 5:40 Pacific time and 8:40 Eastern time. So it's going to be pretty volatile week. At the least, I expect the QQQ to retest the 200-day moving average, which is around 4.7%, and the SPY to retest the 200-day moving average, which is also roughly around a 3%. So one divergence I saw today, even though it was because of one stock, but the Dow was down 0.64%, while the broader markets were up today. Also, bonds were also up today. So the bonds and the stock market don't usually go up in tandem. There's one of the two assets are lying. So either the bond market is lying or the equity market is lying. And in this case, I think the equity market is lying because the bond market is usually the indicator. There's less and less chances that the Fed will actually cut because the 10-year, the 20-year bonds are actually going up. So there's that. That's a quick update on the markets. My view hasn't changed yet. This is pretty significant resistance over here. A lot of investor memory around this region over here. We should expect a pullback, a snapback. Also wanted to show one more thing. Let me remove everything and all the indicators. Okay, just to make it simple for you guys. And this is a weekly chart. And this chart goes back to almost like 2017, 2016. Okay, the chart is in front of you. You cannot see one runaway gap over here. Not one. So a lot of market history over here, a lot of market sentiment over here, but not one runaway gap. Every gap has been filled. Every single gap, even this gap over here, the small gap over here, was filled. So gaps usually, most of the time, always get filled. The probabilities are high that we're due for a very big pullback. The first target is definitely 490. It's a couple of percent, but if we can have a breakout, retest, rebound setup, so breakout, retest, and then rebound from this level over here to new all-time highs, that would be healthy. But right now, this is unsustainable. The market needs a pullback. The same goes for the SPY. These runaway gaps, they usually get filled most of the time. And let's move on to my two favorite stock picks. So one is Google. Before I head into the charts, I want to show the fundamentals of this company compared to all the Magnificent Sevens. Look at how it's been performing. 200. Okay. So let's look at Meta, top of the Bollinger Band, right? things are extremely overbought. Apple, pretty much ranging sideways. Amazon, longer term chart I really like. Look at the weekly or monthly chart. This is a beautiful chart. You can see that resistance, support, and then support back testing it, but this gap needs to get filled to the least, so around $200 level before it starts to go up higher. You can also say today's price action, most of the gains were faded by the end of the day. Netflix has just been a beast, so things are extremely overbought. Look at the weekly charts. You can see high, and we're getting divergences on the RSI. So high, and we're getting a bearish divergence over here. So that's usually not a good sign. Microsoft, it's almost near all-time highs. Nvidia, things are looking overbought for Nvidia. It just recently broke the 200-day moving average. And look, everything is overbought. So I believe we're due for a pullback. Tesla, same thing, extremely overbought. Things can remain overbought for a long period of time, and things can remain oversold for a long period of time. It's not to say that if things are overextended, they can't be overextended. They can be overextended. But the thing is that the risk to reward ratio doesn't match. For example, for Tesla, I would expect to have a pullback over here to retest this line of previous resistance, now new support, and then we can start going higher again. But we should always evaluate in terms of risk reward ratio. Right now, the risk reward ratio favors Google, right? Because Google, you can see that revenue going up, operating margin for the cloud is year over year. It's positive. Traffic acquisition costs going up, YouTube revenue going up, cash flow going up, net income going up, shares outstanding. They're not diluting. In fact, I believe they're buying back. Their shares are not diluting, or so there's less and less shares outstanding. Cash and debt, literally no debt compared to cash and bonds. Operating expenses have been going up because they're making pretty significant R&D, like Google Gemini and AI stuff. So a lot of people have been saying that the ChatGPT and AI game has defeated Google, but they're not considering that Google itself is a competitor, a very fierce and very big competitor in this place. Also, from a technical perspective, you can see that we had a resistance over here, resistance, support, and support. So I wouldn't be surprised to see a big move coming in a couple of days. Also, you see that the oscillators are nowhere near overbought, even on the weekly charts or on the daily charts. It's like Google hasn't even broken above its 200-day moving average. So I would expect in the short term to at least touch 170 to 172, which is roughly a 6% gain from here. And if this 200-day moving average is breached, then I'm very, very bullish. So definitely, this is one of my top picks. Google, compared to all the Magnificent Sevens and the Hoods and the Palantirs of the world, Google's chart is looking very nice, especially as it's creating a double bottom over here. So two bottoms, you can see that one bottom over here, and we can also see another bottom over here. So it's a very nice setup over here. If you look at the weekly chart, so two bottoms, double bottom setup. Usually this means that we could see it oscillate back to 193 region. Also, if we compare this in the QQQ terms, so instead of USD, let's put QQQ, you're going to see that it's been an oscillator. If you look at the weekly chart, let me get rid of the Bollinger Band. You can see that it's at the bottom of the range right now. And whenever it's at the bottom of the range, it usually bounces back. So let me get the monthly chart. Yeah, you see that right now we're at the bottom of the range. So we should expect Google to outperform in the QQQ in the coming weeks or months. The other stock that made headlines today is also my favorite stock, that I'm looking in the markets right now. It's one of my top picks. I'm patiently waiting on this and have a couple of alerts on it. That is UnitedHealth Group. So UnitedHealth Group is it's one of the leading um, health insurance companies in the world. So it's like the Apple of the healthcare world. So you see that. Let me go to UnitedHealth Group. So let's look at the yearly numbers on this. Look at the healthcare revenue going up, the Optum revenue. I guess this would be their drug going up, total individual saved, cash flow, net income, total revenue, which is nice. It's been parabolic. Shares outstanding decreasing. Debt, they do have debt, and their debt has been increasing. So this is not nice, but compared to their revenue, their healthcare revenue, their net income, things are looking nice. Look, also from a technical perspective, this is the monthly chart. It's down 50% from the top. So 50%, and that has happened since 1, 2, 3, 4, 5, 6. So essentially since November or December of last year. So basically in the past 5 months, starting this year, it's been down 50%. And look at where it's approaching right now. It's at 311. The high was at 620. It's at the exact same level that it was in December 2018 to 2020. So a company that has significantly higher profit margins is trading at valuations of 2020. Let's look at the let me also look at the PE ratio. So PE. Look at the valuations. Usually around 16.6 would be a great valuation area. Right now it's trading at the same valuation as was in January 2014. So that's 11 years ago. So you can see from a technical perspective. Let's look at the weekly charts. 1, 2, 3, 4, 5 straight weeks of downside. Broke the 200-day moving average. When was the RSI this oversold? Let's look at it. The last time RSI was this oversold was in 2008. In 2008, the price was $25. Now it's $311. So the RSI, this is like a confluence of indicators. Out of the Bollinger Bands, RSI oversold, stochastics oversold, MACD oversold to hell. PE ratio, same levels as 2014 levels. And Bollinger Band oscillator, it's also down. So this is going to have a snapback rally, and it's going to be snapback rally for the ages. So I would expect at least a 25 to 30% gain in the next few weeks, not months, in the next few weeks. So this is something you can see that I have an alert around the $300 region. So I'm ready to add to this or create a position at the $300 level. Might as well buy options, not financial advice, of course, but this is a very, very lucrative and interesting level over here. At least for a swing trade, I would definitely go in. Also, a lot of gaps being created, and the closest gap right now is 21% away. So you tell me how this is not a good deal. Also, look at this. Let me show you one more thing. Let me get rid of the Bollinger Bands. So from the bottom of 2008, it went from $15 all the way to $281. And then it consolidated, had a brief moment of upside, then crashed like 35%, around 40%. Then from the lows of 187 went all the way to 632, went down similar to over here, had a snap back up, right, and then down. So I believe right now we're over here. We're here. We might have a bottom formation, but this is a very interesting level over here. Just wanted to put that on your radar. So this is a very fundamental stock. Also, if you look at the healthcare sector was basically murdered today. Let's look at XLK usually outperforms S&P 500. Let me show you that. So S&P 500, SPX line chart. Let me add XLV to it, which is the healthcare sector. And let's look at over the long term. Over the long term, it usually outperforms the S&P 500. Let me go to the weekly chart. So you can see that over the long term, it usually outperforms S&P 500. It has not been outperforming the S&P 500 since the past couple of years because the interest rates have been extremely high, and a lot of biotech companies and healthcare companies haven't been getting the appropriate funding for that. That's why. But I believe that aside from the healthcare, at least a swing trade on the UNH would be a great deal. And I would expect a significant snapback to like around 20, 25, 30%. So that is something that I'm definitely looking at. I'm very interested in. So Google, the fundamentals are in play and UNH, the fundamentals and technicals are in play. So instead of chasing these high flying stocks, wait for a pullback on the broader market. So for QQQ, SPY, wait for a pullback and keep Google and UNH on your radar. Those stocks are very oversold compared to the other stocks. Also, just want to share the PE ratio of Google. Look at the PE ratio of Google. It's at valuations where it loves to bounce, right? So in 2015, it was trading at 19x valuations. Then it moved up to 33. So 19, 17, then 30, and now it's again at 15 right now, 16 right now. So I mean, all the indicators, I'm seeing confluence of indicators on these, which is a beautiful thing if you can take action on it. All right, guys, that's been pretty much it. If you guys are not following me on X, it would be a great time to follow, since I do post a lot of charts over there and a lot of market updates over there. So if you want real-time updates, subscribe to the channel. Follow me on X, and also subscribe to my YouTube channel for more videos like this. If you found the video helpful, give it a like. And if you have any requests or charting requests, feel free to comment, and I'll hopefully get back to it. All right, guys, that's been it. Thank you for watching.